Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, we Indians hold a special place for gold in our hearts. We love it for various reasons, and buying gold on auspicious occasions, be it birthdays, festivals, or weddings, it holds a special emotional appeal for most of us. So festivals like Dhanteras and Diwali, they are a perfect excuse to buy some more of the yellow metal. But have you ever wondered how good is gold as an investment and which is the best way to buy it? Well, we'll tell you all about it in today's episode. Stay tuned.
Gold and silver are widely purchased during Diwali, and there are multiple reasons behind it. One is that Hindus consider it auspicious to buy gold or silver on Dhanteras. Dhanteras is the day when the festival of lights, Diwali, starts for Hindus. On Diwali, goddess Lakshmi is worshipped, who is also considered as the goddess of wealth. So it is believed that buying gold, silver, or maybe any other metallic thing is a way of welcoming goddess Lakshmi and seek her blessings, which in turn helps bring good luck, prosperity, and wealth throughout the year. Besides that, there is one more mythological story linked with Dhanteras. I will not go into much details about that, but it is believed that buying gold or silver on Dhanteras helps keep the evil out of the house and bring good luck. Also, people have a traditional view that gold is something which is bankable. It is believed to be the king of bad times. There is a belief that it is an investment for bad times and comes in handy. Also, if you would notice, no Indian wedding is complete without gold. And Diwali is generally followed by the season of weddings. So what many people also think is that if they are making such a big ticket purchase, why not make it at a time which has some mythological value too? At Value Research, we have long held a view that gold is not good as an investment, simply because it is an unproductive asset. When you buy equity, you become an owner of a company and are entitled to all the benefits and cash flows. The changes are reflected in the stock price. Similarly, when you become a lender, whether by investing in a corporate bond or post office scheme, you are entitled to the principal repayment and the interest. Also, when you buy a house, you either save on the rent or generate it. But gold just sits there. It doesn't work. So it's not a productive asset. Now let's also look at the returns. If we look at the long-term returns, gold has been the worst performing asset class. The return generated by gold over the last 10 years is quite similar to what one would have got with his money in a normal savings bank account. That is just 3 to 4%. It is much less than what equity and fixed income have given. Equities have returned 14% and fixed income returned 7% during the same period. Earlier, it was believed that once invested in gold, the money will never fall in value. It will only go up, and therefore gold is believed to be an excellent store of value. Also, if you see historically, whenever equities have fallen sharply, gold has shined and proved to be a good hedge. Say for example, in the year 2008 and 2011, when the Sensex was down by 52 and 25%, gold returned 27 and 23%. But now, gold has become volatile, almost like any other asset class. There are periods which can be easily spotted when gold has fallen and given negative returns. For example, the year 2013, 2015 and 2021. Also, if you come to Value Research online and look at the first period of the oldest gold ETF, you would see that it had fallen by 13% in just 1 week during April 2013. So now, gold is not that stable as an investment as it used to be. And for that matter, It may not even help you beat inflation year on year in a linear way. We also compared the year on year inflation, the CPI numbers that are available on the website of RBI with the annual returns of gold. And here you can see that in the accompanying graph. It could not beat inflation in a linear way year by year, though it went sharply up in between 2019 and 2020, which might have helped eventually to beat inflation over the long term. But in a nutshell, gold is not as stable now as it used to be and has become volatile. A lot has been already talked about disadvantages of investing in physical gold, so we are not going to talk about it in detail. The new age options are the gold funds, gold mutual funds, or the exchange traded funds, and then we also have sovereign gold bonds, SGBs as we call. Gold funds and ETFs help you invest in gold without having to physically buy it. In fact, in case of a gold mutual fund, one can invest through an SIP every month, like you invest in any other mutual fund scheme. Here also, the value of your investment is attached to the value of physical gold. But when we talk about the best way, we believe that SGBs score more than any other way of buying gold as an investment. And there are multiple reasons for that. Gold funds and ETFs have some cost associated with them in the form of expense ratio. In ETFs, one might also have to pay certain amount as brokerage to their stockbroker. But SGBs do not have any such cost. They are issued by the Reserve Bank of India and their value is linked to the physical price of gold. In addition, you also get guaranteed interest at the rate of 2.5% per annum every 6 months. And if you hold a gold bond for the entire tenure of 8 years, the capital gains on maturity are also tax-free. That is not the case with gold ETFs or gold funds. While RBI issues them in tranches, SGBs are also traded on stock exchange and one can buy them from there as well. If the objective of your investment is to create wealth over the long term, then there is nothing better than equities. Gold can only be a supplementary small allocation of not more than 5 to 10% in your portfolio, basically for the reason that it can be a good hedge. But even there, fixed income can be a better option. As an asset class, it is productive and has some economic reason attached to it, unlike gold where the price is dependent only on demand and supply. But all of this is when you're considering gold as an investment, which we do not advise you to. You can still continue to buy it for consumption purposes and enjoy having it. And do buy a small gold coin or in any other form as a token for the mythological value that we have, but do not consider it as an investment.
Well, that's it for today's episode. Keep watching this space for more information, and if you like the show, do subscribe to our YouTube channel. Take care, stay safe. Bye for now.